cryptographically.
Crypto, what the? Hi everyone, welcome to the Alpha Drop. I'm Jackie Roach.
And I'm Rachel Buchanan, and we are creating conscious conversations.
Quick order of housekeeping. For anyone that tuned into the show with part one with Curtis last week, he is teaching with Blockchain Collective a 6-week intensive course. I'm actually going to be taking that one. It's starting on September 24th. It's just a little bit of a friendlier time for our US people that are going to be taking that. So if anyone wants to reach out to me, the alphadrop@gmail.com, or anyone in my connection, just reach out and we can get everybody set up. And yes, just looking forward to that.
Today we are talking with Curtis Chappell again about cryptocurrency, kind of diving deeper into the difference between cryptocurrency and blockchain technology and how the two are together and separate, and you're in for a delightful treat. So welcome, Curtis. Thank you so much for being here.
Thank you, ladies, for having me again. I really appreciate it.
Last time you kind of said to us that your degree in finance was taking away some of your attention from being rich off of your AOL days and working there. You also made a comment that, when people were getting the AOL discs at their home, they were thinking that that was the internet. And a lot of times when we're talking about cryptocurrency and blockchain, people, and even me personally, I didn't differentiate the two. I just heard of Bitcoin and Silk Road and knew they were kind of related. So I'm just wondering if you can sort of weave those experiences together and make this a little bit more tangible for everybody, what the differences actually are.
Yeah, well, again, back in the day when AOL was back in 1998, the internet was there, but there wasn't much on the internet. Whereas AOL had put together a whole platform with content and news and chat and, all kinds of things. And they were so good at just completely inundating everybody with these discs, the free 30 days to come and invite you to come get on the platform. And because, again, there wasn't much internet, they just blanketed the whole country, at least of the US at least. And again, a lot of people just got on AOL and they just perceived that was the internet. And so you have the same thing in crypto where, Bitcoin being the first public blockchain that really got used, a lot of people think now that, as soon as you say blockchain or you say crypto, they just think Bitcoin because that's what they've been exposed to. That's what's on the news. That's what you hear about. If friends are talking about trying to get rich on the internet, a lot of times they're talking about Bitcoin, or people who have gotten rich on this magic internet money. It's because they got into Bitcoin early. So I think we have a bit of the same thing happening right now. And although there's thousands, literally thousands of cryptos available now that you can invest in, Bitcoin is still kind of that go-to name, right? You just have that name recognition. So so that's kind of where we're at now. But as we've talked about before, Bitcoin's certainly not the only thing out there, and it's certainly not the only crypto. And Bitcoin unto itself really only does one thing, and that's allows people to buy and sell or transfer the token. So it's really just a kind of a store of value, and it doesn't really have much of a use case beyond that. And so there's been all these other crypto projects, which are all in many ways trying to tackle, different problems in the world. And here's another problem is that in the world of crypto, words get used in the crypto space, but they mean different things in the world of crypto and in the world of blockchain compared to what it means in normal language usage. You hear the term cryptocurrency, and there's thousands of projects which are not currencies at all. There's thousands of projects which are actually trying to solve real world business problems. So I think there's where we get a lot of confusion, in that a lot of people think that, all cryptos are like Bitcoin, but in fact, they're not. Many of them actually do have very specific use cases and problems that they're trying to solve, which have nothing to do with exchanging value.
This might actually be a dumb question, but why do they call it cryptocurrency?
Because it's secured with cryptographic hashing.
Okay.
So it's a currency. So Bitcoin's a currency. You can buy stuff and trade it back and forth. But again, it's secured with cryptographic hashing. So there's where the crypto comes from.
Okay.
Yeah.
Which everybody knows what cryptographic hashing is.
Well, the science is cryptography. And it's really interesting as well, because I was talking to a gentleman who's actually a little bit older than I am. And I was introducing him to this concept of blockchain. And he was also a manager of an IT training company. And like me, he had been in IT for a long time. So we saw the explosion of certifications. So you would attend a course and pass an exam, and then you'd get a certification. And that certification would actually be valuable in the marketplace. And I was explaining to him how there was a whole new opportunity in the blockchain space to look at starting a certification agency and becoming part of the industry in that capacity. And he was really excited. And he asked the same question. He's like, is the crypto referring to cryptography? And I said, in fact, yes, it is. And he goes, oh, well, I studied cryptography in university, and this whole concept of public and private keys. And I was like, that's exactly what it's all about, right? So if you come from a mathematical background, you would understand that the concept of cryptography. And you might recall, even back in World War II, there was a movie that they made a couple years ago about the group of people. I think many of them were African American who were working on the American side, and they were decoding the Nazis' codes, and they created a machine which actually could decrypt encrypted code. So that's where it all comes from. Cryptography is not just for cryptos. It's been around for a long time. It's just a way of encoding information.
Of course, the blonde had to ask that question,
There's no dumb questions.
I have pages and pages and pages of notes from my conversations with Curtis, but I know one of the first things that really inspired me to learn more and really opened my eyes to the current situation was whenever we first talked about Bitcoin back in 2017. I didn't realize that two things: that the Fed is actually like a privately owned bank. It's not a public owned by the people bank that I had, this concept in my head. And that the fact that we've been off the gold standard for decades and we keep printing money really meant that our money isn't worth what we thought it was, or what I thought it was. In my head, I had this idea of $1 in my wallet or in my bank account equaled $1 of gold in a vault somewhere owned by the government. And this whole concept kind of blew my mind that actually the entire system of money as I knew it wasn't real. Can you talk at all about like the difference of this privately owned Federal Reserve that we're all so familiar with versus the decentralized peer-to-peer network that's going to be coming with this cryptocurrency?
Well, that's a rabbit hole unto itself, right? The whole Fed thing.
Tell us the families, Curtis.
Yeah, exactly. Well, that's true, Rachel. So Nixon took the U.S. off the gold standard in 1971, and it was based on, as I understand it, it was due to the fact that back then you could exchange dollars for gold. And anytime, government has had a situation where you can't exchange dollars for gold, people exchange the dollars for gold. So the U.S. was running out of gold at the time, and we were coming out of the Vietnam War, and there had been a lot of money that was spent, and they were somewhat restricted to what they could create. So basically, they took us off the gold standard, and that just allowed the U.S. to print as much money as they wanted to from that point forward, which is why we're now, whatever it is, 24 trillion in debt, or the U.S. is 24 trillion in debt, because they've just been able to print with nothing holding them back. But if you look at something like Bitcoin specifically was created to fix that problem. And so there will only ever be 21 million Bitcoins ever created. It's a finite amount of tokens or coins that will ever be available. And oh, by the way, there are some people that estimate somewhere around 4 or 5 million Bitcoins have already been lost due to people losing their private keys and people throwing out computers. I remember a story about some guy's wife was cleaning out his closet and threw out an old computer that had 10,000 Bitcoins on it, those kinds of things. So there probably is only ever going to be about 16 million Bitcoins. That sets a finite ceiling, I guess, on how many there will ever be. So once they're minted, again, that you never will have more than 21 million. So it keeps it valuable, if you will. It can never be watered down. Whereas, your comment about the dollar, I've seen statistics that since the beginning of the Fed, which was 1913, that the value of the dollar has been reduced by about 98%. So what $1 can buy today is only 2 cents compared to what $1 could buy back in 1913. And of course, you also have, along with that, inflation that's driven all the prices up. Everything's a lot more expensive now than it was back in 1913. So you have both things going against you. You've got the dollar getting devalued and prices going up. And so we're getting screwed. And I think that's why a lot of people put a lot of faith and belief into Bitcoin, simply because of the fact that it's called deflationary. But again, that's a bit of a rabbit hole question, that's for sure.
Yes, it is. But you did a very good job wrapping all of that information. And even for me, I didn't really grow up learning how to invest even in the traditional markets. So getting into cryptocurrency, I remember when I was getting my MBA, I was doing well in every subject. Corporate finance, I got a C in. Accounting, didn't do hot in either. And I was like, this is a whole new language. This isn't even school anymore. Why am I even doing this? So I think with crypto too, it's like I'm seeing this whole new language, and it's almost like a little bit of a barrier to entry for a lot of people. So how can you sort of compare the two, our traditional view of investing and making money on your money, and now we're in cryptocurrency and, you know, making coin on our coin?
It's a great question, but it's kind of hard to answer. I know that Rachel had sent through a couple of questions before this meeting, and one of them was, how do you value cryptos? And I was like, oh wow, it's such a big question, but I think that's kind of what you're asking as well. So in a traditional market, you look at a company, and there's lots of ways to analyze it, but traditionally, you would look at the company's balance sheet and their income statement and their profitability and how long they've been in play. And there's a ratio that a lot of people refer to called the PE ratio, which is just price divided by earnings. And then you get a number. And, great investors, like Warren Buffett, they follow a very strict regimen of looking at companies that traditionally have fairly low PEs. So the lower the PE means that you're getting more earnings for the price. So as a PE ratio goes up, that means that the price is going a lot higher than what the earnings are actually providing. And that's a traditional way of evaluating, companies, stocks, if you will, when you're looking at investing. So, and then you have like traditional bonds. The price of a bond is inverse to the yield. So as the price goes up, the yield goes down. As the yield goes up, the price goes down. And those are very easy things to calculate, because it's, if you have a 10-year bond, it's going to pay you a yield for 10 years. A 30-year bond is going to pay you for 30 years. A 30-day note is going to pay you, that whatever it is in 30 days. And you can calculate that quite cleanly and then put a value on that. Cryptos, on the other hand, are different. Cryptos don't create earnings. In other words, most of the crypto companies are in complete startup mode, and they're not generating revenue. Some of them, which we will elaborate on, provide tokens, and so you can stake these tokens and get more tokens, but they're not spitting out revenues. So it's very difficult to put a traditional financial analysis on a crypto, simply because you don't have those metrics. You don't have balance sheets, you don't have earnings. But really, it's this concept called price discovery. And in the world of crypto, a lot of times it's everyone's best guess. And unfortunately, you also have a lot of people on the internet and on YouTube specifically, which are getting paid to promote certain projects. So the project pays this, the famous YouTuber to go talk about their project, and then the YouTuber talks about it, and people get excited, and they don't have a finance background either, so they go buy this token. And that might work and might not. Sometimes, we have this concept, what we call shilling, where people will talk about a project and drive the price up, 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 up. They have a bunch of these tokens already that they've purchased, and then once the price hits a certain point, they go and dump it all, and they sell it all. So that happens a lot on the internet as well. It's a bit of a minefield, to be honest. Again, what I was thinking about is I couldn't think of any tokens that actually have earnings. And there's thousands of projects, and obviously I don't know, every project. I mean, I'm invested in about 50 projects, and I follow the news. There's a whole new world blowing up now in called DeFi, which is decentralized finance, and all kinds of different ways to do yield farming and harvesting. And I couldn't think of a single project which actually makes money, as in, creates dollars and then puts those dollars back out to shareholders. Again, there are some projects that you can stake your tokens and get tokens back, or get additional tokens. You might get a token of a different coin. But yeah, it's a very difficult place to be when you're trying to put a value on these things, which is one of the reasons why it's so scary and dangerous, and not necessarily the place where a lot of people want to put their money, simply because it's just because of that. It can be a very scary place. And there's very little logic that you can apply to a lot of these projects. A lot of it is simply guesswork. And, it sounds like a good idea to me, so I'm going to put some money there. For those of us that I guess have been in the game for a while and do try to understand some of the technology, sometimes we can see what we believe is a good idea. and we think that it's going to add value to me or to the world, solve a problem or whatever. And so I'll invest in those types of things. I try to read up. Most of the projects do have websites and what they call white papers, where you can go see what are they trying to do, how does it work, how do the tokens work, what's the mechanism, what everything does on the back end. So there's some research you can do, but a lot of it is, I hate to say it, just guesswork, unfortunately.
Buyer beware.
Absolutely. And, I will say, we should say this just as a disclaimer that, anything we say today is not considered financial advice. And, we're not financial advisors. And, anyone who stumbles across this video and wants to utilize this information, fantastic. But you do have to do your own homework and do your own due diligence on any project that you invest in. Don't just buy something because some famous YouTuber said it's a good deal, including
I was
us.
just thinking, it's so crazy the world we're in with influencers. I mean, this happens in every industry where there's just so many decentralized advertisements everywhere. It really is difficult to decipher what's real or not. I think mentioning white papers is a great tip, in my opinion.
Yeah, look, it's a bit of a wild west at the moment. I mean, it was worse back in 2017. I think things are maturing in the marketplace now, but it's still crazy, and there's still projects out there that are complete scams. And yes, buyer beware, absolutely. So do your research. Maybe that's another course we can do, is how to do some research on a project, because there's lots of ways, lots of things you can do to go look at how old a domain is, and those types of things. Is the address real? Does the company actually have an office at the office that they say that they have, and those types of things. So you can do quite a bit of homework on a particular project and try to determine whether it's legit or not. Having said that, you also can go to a website called coinmarketcap.com. There's another one called coingecko.com. And those are basically just listings of all of the projects. CoinMarketCap, again, has thousands of tokens listed. If you're kind of playing in the top 100, so it's on CoinMarketCap, the first 100 are on page 1, and then you have to click on another page to see the next 100. If you're investing in the top 100, you're probably dealing with legitimate projects, because they're listed by their market cap. Well, you can actually filter it to list any way you want, but when you land on CoinMarketCap by default, the default setting is it's by market cap. So in other words, it's the most valuable projects. So Bitcoin's always first, Ethereum second, XRP is often third, and then it moves up and down. They move up and down with regards to the market cap.
Is that where all my money is stuck right now, Rachel? I thought all my money was stuck on that website.
That's another point that I want to bring up. And I think what you're talking about is, you're talking about a website. I think what you're talking about is your money, your coins is on an exchange. And again, in traditional financial markets, at least in the US, you've got the stock market, right? And the stock market is the Dow Jones, the top 30 that are in the Dow Jones. And then you've got the NASDAQ, which is, the companies are listed on the NASDAQ. And that's the only place you can go buy or sell that token. And you've got the S&P 500, which is just, a listing of the 500s. But, if you want to buy a NASDAQ stock, you can go to, different platforms. You can go to like Ameritrade or, any of those other investment companies that allow you to invest. But all of the purchases are happening on the main exchange. There's only one exchange in the States where you can buy these things. There's different ways to get to that exchange, but there's only one exchange, and it's only open from 9 until 4 p.m., 5 days a week. In crypto, there are multiple exchanges, and they're all over the world. And those exchanges are trading on their own. So some exchanges have some tokens listed, some exchanges have other tokens listed. And so you might, join a specific exchange because you want to buy a specific token. But what can also happen there is one exchange will have the same token as on another exchange, but the prices are different. One exchange, so Bitcoin might be 50 cents more on one exchange than on this exchange, right? So that's another thing that you need to be careful of, because if you just, you decide you want to purchase a particular project, obviously it makes sense to try to go to the exchange where it's trading at the lowest value, so you can get it cheaper. So that's another big problem with, not a problem, but it's certainly a challenge for investors, around the world who are trying to get the best value for their cryptos. But you just need to be aware that, as I said, different exchanges can have different prices for the same token or same coin.
Can you talk to us about the different types of cryptocurrencies? and like the fact that some of them can actually be used as money versus others that are just projects, just so people know whenever we're talking about cryptocurrencies to kind of like create that just foundation of knowledge and understanding about the world of crypto.
Yeah, so traditionally you've got, again, things like Bitcoin and Litecoin, which are mainly what we call a means of exchange or store of value. And so you can, purchase those in many cities now. Many businesses are now accepting Bitcoin, Litecoin, Bitcoin Cash. They're actually accepting those to be able to purchase items. One of the problems that you have with those at the moment is, specifically right now with like Ethereum, not that a lot of shops accept Ethereum. I think most shops these days are probably accepting things like Bitcoin and Dash and Bitcoin Cash. But this is one of the reasons why I think that the cryptos haven't become as popular as they could is Jackie, as you've realized, they're difficult to purchase and difficult to manage. Again, because the value goes up and down, sometimes you wouldn't mind using one of your tokens to purchase something, but if it goes up in value, you may have second thoughts about using that to purchase something. The other problem is is what we call transaction speed. So this concept of transactions per second. So if we just compare, as an example, Bitcoin to Ethereum to like a Visa card, right? If you're going to a shop and you're paying for something on Visa, if you go to the Visa website, they'll say they can do like 50 million transactions per second. But I think the reality is they're doing about 15 million transactions per second. Now that's, it sounds like a lot, but the average Bitcoin transaction per second is like 8. So between 5 and 8 Bitcoin transactions per second. Ethereum was at about 15 seconds, but because of what's happening in the DeFi space and there's so much activity on the Ethereum network, I haven't seen the numbers, the transactions per second, but it's really slowed down. It's probably as slow as Bitcoin now. And so what that means is that, if you go to buy a cup of coffee and you swipe your Bitcoin card, you'd be sitting there drinking the coffee and you'd probably finish the coffee before the transaction actually hit the register, right? It's not convenient. It's not convenient for you. It's not convenient for for the vendor. So again, you're standing there for 15, 20 minutes waiting for this thing to process. So it's just, I think this is one of the reasons why many of these tokens are not being taken up in the real world yet, for that very reason. People are holding them because they think they're going to go up in value, so they don't want to spend them. And then this whole wait time that it takes to get a transaction across the line is a problem as well. And there are specific tokens that are trying to solve those specific problems. You also have a different type of token that's also cryptocurrency, but they're private. So we talk about this concept of, once someone knows your Bitcoin address. So if you two trade Bitcoins, right? So you send Bitcoin from Jackie's address to Rachel's address. You both now know at least one of your Bitcoin addresses. And if just by following and tracing using what they call, on-chain forensics, you can track everything that happens from that address going forward. So you can see every time Rachel then sends it to someone else, you can see that. So this is a problem in a public network. So you can imagine, a business pays another business out of their bank account. Well, that other business can't go look at the bank account and see everything that's in there. But in Bitcoin, you can do that. There are coins that are called privacy coins, which use various types of technologies to mask that, or fix that problem and mask the transactions. So those are two types. So those are two types of currencies. You have other tokens that are considered like utility tokens. So one project that I follow, they actually have two different tokens that they created. They have a token that basically is, that you invest in and it pays out a dividend. They have another token, which is a utility token. And by holding those tokens and registering them on their platform, you get discounts on their, it's a trading platform. So they trade stocks and Forex and foreign exchange and all that stuff. So by holding the utility token, you get extra benefits as a trader. You get lower prices, you get access to free training. And so there's the concept in the crypto world called utility tokens as well, where the token represents a value and can be used on that platform. And then there are tokens which are tied to specific products. There are tokens that are considered like gas. In other words, some of the platforms require a transaction fee. And so they have a single token. An example could be ONT, which is just a protocol. And ONT uses a secondary token called ONG. You can go out and buy ONG if you want to transact on the ONT network. If you want to have an application on that network, built on that network, every time a transaction happens, it uses a little bit of gas, which is the ONG token. So you can either go buy ONG to use on the network, or you can actually do what we call staking, and you can buy ONT, which again is the protocol token, and put that into a wallet, and over time that automatically creates ONG for you. So again, you can either go buy the gas token, or you can stake it and let it create the gas token for you. And there are many projects that utilize that framework, if you will, where it's a single token again for a platform, and then they have this gas token. Ethereum uses its own token for the gas. So if you're going to build an application on the Ethereum network and transact, every time you do a transaction and write to the smart contract or write to the ledger, you're going to pay a transaction fee. So every time you send tokens, because that's being written to the ledger, you're going to pay a little bit of Ethereum out of your wallet to cover that transaction fee. And it's it's a kind of crazy way of looking at how to do business, but it's kind of the new normal. This is where the world's going. So there's a lot to take in. I hope I'm not confusing people. There is a lot to learn, and I'm probably putting too much information out there in one answer, but you asked the question, so I'm just trying to get you the best answer that I can come up with.
I know I've been guilty of, because I'm definitely a believer in the wave of the future, and that crypto is the answer to so many problems as far as the decentralization and this peer-to-peer network and the supply chain. And I know that I've been guilty of wanting to just like hold on to all of my coins that I have, that I know that, you know, whenever I go to a website, if they do take, you know, Litecoin or Ethereum or Bitcoin, that I don't want to spend them because I'm banking on the fact that they're going to go up. And so I know I've been guilty of just wanting to like hold on to the coins. And do you have any ideas or thoughts about like which coins would be better to use on a daily basis as like a cryptocurrency? You know, if you're trying to pay your neighbor for mowing your grass, or, you know, going out to get some dinner, or, you know, any sort of situation like that, can you tell which one to use and which one to keep?
I'm going to answer this, but understand that this is a very personal question. You know, there's a lot of tribalism in this space. I think one token that's doing a good job of trying to get the word out there to use cryptos, and the guy who created it, a guy named Roger Ver, who a lot of people hate in the space because he forked Bitcoin, and then he created a new token called Bitcoin Cash. So this, from a personal perspective, if I'm going to buy crypto to then turn around and spend, I tend to use Bitcoin Cash. Two reasons. I don't think long-term it's ever going to have the same value as Bitcoin is. And again, that's a personal opinion, and we're probably going to get trolls on the channel just because I said that. But here in Brisbane, there's a bunch of shops that accept Bitcoin Cash and Bitcoin. There's a place here called Fortitude Valley, and it's being nicknamed Crypto Valley because so many of the shops there do now accept those two cryptocurrencies. So this is the issue with crypto at the moment. So I went to this bar, and the waitress, she knew we were a crypto group, and so they were ready to accept, you know, cryptos. With most of the cryptos these days, if you have a mobile wallet, she puts a price in, puts a transaction in, new transaction, and it puts a QR code up, and basically it's a receive QR code. And then you bring up your wallet on your phone, you scan the QR code, you're doing a send transaction. So you basically can pull the crypto right off your wallet, and it goes straight to their wallet, right? But here's where you can really mess up, is that the girl, when I bought my beer, she actually created a Bitcoin QR code, and I was using Bitcoin Cash. Well, they're two completely different networks. And even though the transaction, it's bizarre, and this is probably a technology that will hopefully soon be fixed, even though it's the wrong network, it still allows you to send the Bitcoin Cash to the Bitcoin network. So the QR code still accepted it. So it took my Bitcoin Cash off my wallet, but it never hit theirs because it wasn't a Bitcoin Cash wallet that she put up there. She put up a Bitcoin wallet. And so that means my Bitcoin Cash is now out of my wallet, but it's gone in the ether. I can never get that back. And that's a problem that you can see where, again, someone has that kind of experience, you see that, wow, I'm never going to use crypto again. This is complete crap, right? And this is just the state of the nation right now. So it still is fraught with lots of human error potential. That's a big problem. And you just need to be cognizant of these things when you're out there transacting and using your Bitcoin. But again, to answer your question succinctly, matter of fact, I bought some Bitcoin Cash just the other night because I knew that I was going to this event, and I knew that we were going to go buy a couple beers with Bitcoin Cash. So I just took some money, real regular money out of my bank account, and bought, $50 worth of Bitcoin Cash because I knew I was going to spend that money anyway. But I thought I'd just be cool and do it with Bitcoin Cash wallet so that I'd be part of the crypto group and be, part of what they're doing, and yeah, just be a representative, and just be in that space where you're actually engaging, using those tokens as they should be used. It's just very transactional. And again, this guy Roger Ver travels all over the world, basically saying exactly that. Take your money, buy Bitcoin Cash, and then use it. And here in Australia, there's a website called Satoshi's Living Room. And you can go there and you can actually use a number of different cryptos to pay your electric bill. You can pay your school fees. You can pay all kinds of things. There's all kinds of programs that have plugged in. And the way that works is that this Satoshi's Living Room is really just acting like a middleman. They take your crypto and then they take a fee, and then they turn that crypto into cash, and then they pay the utility company with cash. So it's just a window, if you will, to go pay those bills, but it's not like the utility company is accepting the cryptos. There's just a middleman. Having said that, some of the businesses that I mentioned before do accept cryptos, like this bar that we were at. So they were actually accepting your crypto, and they were putting your crypto in their wallet.
I think it's really interesting that you're saying like how much volatility there is in the cryptocurrency space. And I think this is why it's important for me to differentiate it from what blockchain is, and that's
Yes.
Not as volatile. Can you maybe just like bridge that gap a little bit?
When we did our previous session, we were talking about learning applied blockchain. So we were talking about, learning how to become a consultant to work with the blockchain technology to fix business problems, right? So there's no value in that. In other words, we're going to use a blockchain platform. Like as an example, again, say we wanted to build on Ethereum, we wanted to build our business solution on Ethereum. And we wouldn't care in that instance what the value of Ethereum was as it went up and down, because we're simply using it as a platform. It's kind of like you use a Microsoft operating system to build a dApp. You don't care what the value of Microsoft stock is as it goes up and down, right? You just want to make sure that the platform is stable. So I guess that's one way to answer your question. So, you can be working with applied blockchain and solving business solutions, and the value of the fluctuations don't really matter. Or you're on the other side of it where you're speculating on the value of one of those platforms. And if you're a speculator, you certainly care of what the value of ETH is. But yeah, if you're building a business solution on a blockchain, you're not so worried about the price the underlying token is as you are if you're speculating.
No, I appreciate that. I think Ethereum is a good example of differentiating those things. Just for anyone that wants to kind of get a handle on this space, it might be a good company to sort of play around with their website and look around and poke around.
Ethereum, I believe, has the most dApps that are built on it. There's an interesting website. I think it's blocktivity.io. If it's not .io, it's .com. And it's a great website because you can go there and you can see which baseline protocols are the most popular. So you can see which one has the most transactions per second. You can see which one has the most dApps. You can see which one has the most users. So it's a good way to see how those chains are being used. And you can make some judgment calls, especially if you're speculating on what the value of those underlying protocols might be. But if you're a developer, you also can go see, well, what are where are the most popular platforms? Where are the most developers? And I believe that Ethereum has the most dApps and the most developers at the moment. But there are other chains that are quickly coming up behind them, like EOS and Tezos and Cardano and et cetera, et cetera. So there's lots of underlying protocols that are kind of battling it out to be the number one player in that space.
And one last question. When you say dApp, that's a decentralized app. As an end user using my cell phone, would I know that there's any difference between a dApp and a regular application?
If it's built well, no. That's the whole concept, that we're trying to build dApps that the end user doesn't even know that there's a blockchain behind it, and it's using distributed technology. That's the goal.
So I know that you said that you're holding, upwards of 50 coins right now, and you've done a lot of different research. What are some of the things that you're looking for whenever you're, weighing your investments more heavy in certain coins other than others? And like, what are some really interesting outside of the box projects that you think are really something to be keeping an eye out or learning about?
So I started my YouTube channel back in 2017, because of the crypto explosion, and I was obviously promoting projects and making affiliate revenues and income and getting bonuses and all that stuff. And I guess I began to gravitate towards passive income tokens or projects which provide you some form of passive income. Now, passive income is a bit of a misnomer because it's only income if you sell it. Most of these projects, you're actually getting some kind of token. So by holding the token and by doing what we call staking, so you basically put the token in a wallet which lives on the network, and so you're actually participating in what's called proof of stake. By holding your tokens in a specific wallet, they reward you with again either more of that token, or they pay you in their gas token. So again, I mentioned ONT. So again, you can stake ONT and you get ONG. Another project that I've been really excited about is Cardano. And again, we'll probably get a lot of trolls on here because a lot of people, for whatever reason, the internet hate Cardano. It's one of these projects where they're basically using, science-based research. They do white papers, and the white papers are peer reviewed, and, they tend to think through conceptually what they're trying to do. And then, from that scientific concept, they then use applied science, and then they go into the applied, layers of cryptography and the programming. And again, understand that all of these cryptos, it's all software. So there's developers, again, there's entrepreneurs who are running these projects, and they have developers which cut the code, so to speak. And then there's people like us that invest in these projects and either want to build on top of it or just invest and speculate. So because of the scientific methods that Cardano uses, they've been very slow. It's been a very slow moving project. It's 5 years in the making, and they literally just launched their main net not too long ago. And they started their staking. So they did a test net staking back in December, and that went live just a couple weeks ago, actually. So you can actually go in now and take your Cardano tokens and stake them and then get rewards. Those rewards are paid out every 5 days in Cardano sense. There's another project that I have a few tokens in, which is Icon. The symbol is ICX. And that's another opportunity to stake. And they use a wallet, which is Chrome extension. So basically you install the Chrome extension in your Chrome browser, send your tokens there. So basically you get an address and you send your tokens there. And that project actually pays out every day. So every 24 hours, you get some tokens sent out to you. And in both of those instances, you can then take those tokens that you've staked and the new tokens that you're creating, and you can turn right back around and put them right back into your wallet. And so you start compounding. So you're starting to make staking on your staked tokens, right? I've got a few that I bought a long time ago. Things like Redcoin. When I bought Redcoin, it was like 0.0000007 cents, and now it's like 0.0002 cents. So it's again, we're still talking about tiny fractions of increments. I mean, there's also a concept called, and I'm kind of going off the beaten path here, but there's another concept called master nodes. So you can do that with Cardano as well. So if you run a master node, you basically, you're managing a part of the network. So instead of just putting your tokens in someone else's master node, you actually run the master node yourself. And so you, not only do you generate tokens that you give out, but by running the node, you also get tokens that you get to keep. So there's lots of layers and there's lots of ways to get involved. And you can I've actually thought that, there's a huge business opportunity simply by setting up master nodes in some of the more popular projects. And I remember,
was gonna ask, what goes into could I have one at my house right now?
If you want to be a proper node, so these organizations, these platforms expect you to be up 24/7, right? And traditionally, you're going to want to have a fairly strong computer. Now, I was at a blockchain event last week, as I mentioned, and the guy was talking about mining Bitcoin, which is mining Bitcoin is kind of the same as having a staking master node. But you need a computer to run software to do the mining. And he basically said, if you have a gaming computer, so if you have one of those $5,000 computers that's got super high quality video chips that you literally can mine from home if you want. And I'm staking here from a computer here. But if you want to if you really want to run a master node, you probably don't want to do that out of your house. You probably want to have, like a cloud server, which again, you can get from, from Amazon or any of those online providers for just a couple dollars a month. So you have a virtual server in the cloud, and then you have to set the software up to run the master node. And then some master nodes require a minimum number of tokens to be able to run the master node. Some are quite small, like Cardano. I think you can run a master node with as little as 10. Whereas if you look like at Dash, and Dash was an interesting story because when I first got into crypto, Dash was, I can't remember, something like $8, and it went all the way up to like $180 at the height. So you had to have 100,000 tokens to run this master node. So again, I think you needed 1,000 Dash tokens, which were $8. So that was $8,000 to set up your master node. But then a year later, Dash was at $180. So that $8,000 master node was now worth $180,000, just in the value of having just the master node itself. And of course, if you have a master node, you're actually making money from every transaction that you're processing as well. So then your other question, Rachel, was, are stake pools the same as master nodes? A stake pool traditionally, and again, it varies by project, but I'm going to try to be as generic as possible. In a staking pool, what that means is that you have people who don't run master nodes, and they pool all of their tokens together on a master node, right? So that's quote unquote what a staking pool is. Okay. But if you go to like the Cardano network, they're called staking pools, but each one of those staking pools is a separate master node that you're actually assigning your tokens to. So it kind of can mean two different things, really. It's, again, it's the crazy world of crypto. That people are using words, and oftentimes they don't mean anything like what it means in another project. So that's just part of it, unfortunately.
And Curtis, like everything you're speaking to right now, I think this is just what's so interesting to me is like, if you have an IT background or an IS background and you've got some, computer software at your house, like there's so many ways to get involved in this. And I think when I asked you that original question about investing, like this is the sort of things I'm thinking about is, can I get involved in a staking pool? Can I get involved? Like what can I get involved in that's going to generate this like passive kind of income that you're talking about? So thank you so much for explaining all of that in such depth. I really appreciate it.
My pleasure. And there are many, many, many ways that you can get involved. It's just a matter of finding a project that you believe in. I think this is the best way to do it, is find a project you believe in, learn as much as you can. Most of these projects have, it depends again on how you like to consume information. So a very popular website is Telegram, and a lot of the projects have their own Telegram channels. If you're into Reddit, most of the projects have Reddit threads that you can follow. Some of them have forums on their own sites. Many of the projects, you can literally, go to their website and reach out to them and request to have a chat. And a lot of times they will literally, come back around and have a chat to you, so you can have a Zoom call with some of the developers. So it depends on how, in-depth you want to take it, but there are numerous ways to create passive income in the crypto space. Absolutely.
It's funny that you say Cardano would get trolls in that, and maybe I'm just not in the space as much as you are, but I feel like their communications are all about ethics, and they're all about like explaining transparency. I mean, that's what I responded to with that company when you guys were getting me into it. I was like, wow, this company is doing it right. So
I agree with you, Jackie, that behind the project is Charles Hoskinson, but he can sometimes be quite aggressive and protective of his project and his community. And so a lot of people consider him a bully or that kind of thing. So, and he gets misrepresented a lot as well. But ultimately, he's trying to make the world a better place. And, he literally, they've gone to Africa and they've spent, months in Africa training kids, how to program. And, they're trying to literally provide opportunities for individuals in places that are considered unbanked, right? Opportunities to create businesses and change their lives. And ultimately, I think it is a great project to support, simply because, ultimately that is their goal, is to make the world a better place. I do think that is a great project just because of their philosophy. But again, they have a lot of haters for all the reasons that I've already mentioned.
Well, it does take time to make the world a better place.
Yeah, I admire the conviction for sure.
Oh, by the way, it's currently paying about a 3.5% dividend on the tokens, and you get those paid out every 5 days. There's two ways to work with Cardano. One, you can download the Daedalus wallet, which is a wallet that sits on your desktop and you have to download the whole blockchain, which can take a little while, or there's a mobile app that you just mentioned. I think it's pronounced Yoroi. It's Yoroi, and you download that wallet on your phone, and you can now, I believe now you can actually stake through that wallet as well. So you can hold your Cardano on your phone if you want. You can have the whole blockchain living on your desktop. And I just want to, before we leave, I want to talk about this concept of wallets, because I think it's important. And again, it's a word that was borrowed by the crypto community, but it doesn't really mean what the word means. So when you say the word wallet, in the traditional sense, you think of, a physical thing where you put physical things in it, right? Whether it's money or credit cards or keys or whatever. So you have this wallet that you carry around with you, and whatever's in your wallet, whether it's in your purse or your back pocket, that's carried around with you, right? And you have instant access to anything that's in your wallet. With regards to the world of crypto, a wallet is really more of a window into your tokens that are actually held on the blockchain. So when you have a wallet on your phone, you're not literally carrying your cryptos around with you. You're only carrying around a window to go look at your cryptos, and you can use that wallet to send and receive cryptos and do things. But as an example, if you lost your phone, you haven't lost your tokens. Most wallets will require you to either save what's called a seed phrase, and those are traditionally 12 or 15 words, or you'll get what's called a private key. And in both of those scenarios, as an example, if you lost your phone and you had Cardano on your Yoroi wallet and your phone disappeared or fell over the boat or whatever, all you need to do is on your new phone, you reconstruct your wallet using your seed phrases or your private key, and lo and behold, boom, there's your tokens again. So you're in crypto, the tokens never leave the blockchain. You're only, again, getting a view into your tokens that live on the blockchain. Does that make sense?
A new layer of monetary consciousness.
Absolutely. And we haven't even gotten into the fact of just how clunky and troublesome it is right now. We're in such the early days that, the troubles and problems that we're having right now as far as buying and transferring into the wallet, making sure that you copy and paste everything exactly correctly, and there's no auto signal that says, oh, you're sending it to a wallet that's not actually going to accept it. All of this will, in 5 years, we're going to be laughing because everything's going to be so much more streamlined. But, right now it can be just scary to, for a newcomer coming into space.
And I'll be completely honest with you. You do have to be so careful when you're dealing with these things, and specifically when you're sending them either to yourself or to a wallet or to someone else. And I cannot stress enough that, you're going to have an address that you're going to send these things to, and those addresses can vary. So in other words, you can create multiple addresses in some wallets, or some wallets you only have the one address. But they tend to be very long strings of letters and numbers, and you want to get into the habit of, when you're cutting and pasting in, from your whatever to whatever, that you stop and take a moment to look, what are the first three letters and what are the last three letters or numbers, and make sure that those two match up. And it was not too long ago, I was in a hurry and I was just trying to get everything over very quickly. And again, you've got the wallet, copy and paste, and you have transaction ID, copy and paste. And I, by mistake, clicked on the transaction ID, copy and paste, and copied that over into the address that I was sending it to, and hit send. And I'm sitting there staring at the other computer, waiting for it to come, waiting for it to come, waiting for it to come. And, usually it takes, sometimes the exchanges actually have to go buy the token themselves. They might not have it in the bank. So sometimes it takes a few seconds or maybe even a couple of minutes. And half an hour later, nothing had come through yet. And I was like, what the hell? And I went back in and looked at the transaction, and I saw what I'd done. Right? I'd only copied the transaction ID. And so that was 1,000 Cardano that is no longer on the face of the earth, because it's now gone to ether. No one's ever going to see it again. And it's, a bummer. At the time, it was worth $130. You know what the worst part? 2 weeks later, Cardano doubled in price. So the $130 was now $260 that I didn't have anymore. So it was very, very frustrating. And I share that story because, even those of us who have been in this place for a long time, and this just happened 2 months ago. So, it's easy to make a really silly mistake, especially when you're not paying attention. So I can't stress enough, if you get into this space and start playing with some of these cryptos, that you try to, create some habits that will protect you from making silly mistakes like that. Stay away from your cryptos if you've had a few drinks. Stay away from your cryptos if you're talking on the phone to someone and kind of half paying attention. This stuff is real money, right? So you want to treat it seriously and take it seriously and make sure that you're doing it the right way every time.
And there's no one to call.
All you do is cry to yourself and tell your friends what an idiot you are.
Thank you so much, Curtis, for joining us tonight and talking with us all things cryptocurrency and really bringing some light to all of the different ways to make money and projects and just all of the wonderful things. So thank you so much.
Just a reminder that all these projects, they all need people, right? And there'll be new projects in the future that need people. So just as a reminder about the training course that we're going to be running, it's going to start September 24th for you guys, is that, we're not teaching cryptos stuff. We're not teaching the stuff that we're talking about today. We're teaching people how to get involved in the blockchain business and how to become consultants in the business. And you don't have to be just a consultant. Obviously, all these crypto projects are going to need marketing, and they're going to need operations people, and they're going to need sales people. So it doesn't really matter what your background is in general. You can, once you understand the kind of the jargon and how blockchain works, you certainly can go look for opportunities in those spaces and, make blockchain a career as well.
Yes.
And we will put the link to register using our code Alpha200 in the description, as well as the link to register for the course. And of course, you can always message us with questions, comments. We'd love to hear from you. Like, subscribe, our email address, thealphadrop@gmail.com. And thank you so much for joining us.
Thank you, guys. Hop on these opportunities. Thank you again, Curtis. This is really, really fantastic.